So let's jump into price action. We hit an all-time high at 123K thereabouts this week. We're back down to where we were last Friday for this show, around 117 now. There's some interesting stuff with price, and an interesting kind of a big milestone here on the realized cap. This is from our boy Checkmate from Down Under, and he talks about the realized cap that just hit $1 trillion for the first time. He says this is the ultimate metric for adoption as it captures the wealth and capital saved in Bitcoin, an absolutely massive milestone. John, can you give us a quick definition of realized cap? I'll also throw this up from Checkmate. He throws it in here too.
Yeah, for sure. So the first thing I'll say is that this is an estimate. It cannot be observed perfectly and directly, but what it's trying to capture is the amount of dollars that have been saved in Bitcoin or that have actually gone into Bitcoin, rather than, we talk about Bitcoin's market cap a lot, 2.5 trillion, it's around there. That's what the current value of all the coins are worth based on the current market price at any point in time. That is important, no doubt. But you also want to know, like, what did people put in? What are they continuing to put in? What's the momentum of this asset that you're studying? So that's what this realized cap field intends to look at. The reason it's not perfect is because it looks at when coins move on chain. So you can imagine a couple of things here. And this was in the thread of that particular thread. So go check it out if you want more. But basically, what if you DCA'd for a long time, like years, into a platform, and then you withdrew to self-custody? That's the first on-chain transaction for you. That would be reflected as your appreciated value. It wouldn't be reflected in realized cap as the dollars you put in. And that's, again, what realized cap is trying to capture. So it's not perfect. James Checkmate tried to say, he got asked this question, and other people have done like this filtering to try to do the sleuthing on chain to say, hey, was this somebody who held this for a long time and just moved it? We shouldn't count it as the new value just because it moved, because it stayed with someone. That wasn't new money flowing in. But his point was that when you've looked at it, yes, it's not perfect, but it's not going to move the needle a ton. So you should think of that 1 trillion as an estimate for the amount of money that has come into Bitcoin without appreciation, just the money that has come in. So that is a big milestone. I think you're going to see that number grow a lot more as time goes on.
Yeah, it is a huge milestone indeed. And as you can see from the chart itself, it just pretty much continues a relentless march up. There's flat and slightly down parts of the chart during bear markets, but it's really ramping up extremely quickly right now. Let's take a look at a chart comparing cycles. These are the halving cycles. So in between each halving, you can see the price run from between, I guess, no halvings into one halving, and then 1 to 2, 3 to 4, etc. So right now we've had this nice persistent just march up and to the right, and usually there's some kind of blow off in the past that's driven by different reasons, and I think in different cycles. But a lot of these, in my opinion, were driven, and I think it's pretty clear, driven by retail FOMO, right? It's just all of a sudden Bitcoin's being talked about everywhere for 6 weeks. Everybody's piling in, trying to make fiat gains. This seems to be a very different cycle where we have little apparent retail participation up to this point, at least new retail participation. And it's mostly being driven by Bitcoin treasury companies and institutions in some fashion accumulating a bunch of Bitcoin. So guys, do you think in this sort of new paradigm where we have large established players in the finance industry and corporate world accumulating Bitcoin for balance sheets and to execute a Bitcoin treasury strategy, is that going to mean that we're not going to see some kind of massive blow off top this year, and that we might not see a bunch of massive drawdowns, maybe even where we might have seen a 70, 80% in the past cycles of bear market after a huge run up like that as well? Are things going to be different in the way this cycle plays out toward the kind of the end of the bull market here?
Yeah, I think you can say this time is different already based on just looking at those charts, right? As far as the beginning, what everyone's waiting for is what does this last piece truly look like? And there's so much pent up demand based on these treasury companies, potential of government purchases, etc. A lot of it, in my opinion, is going to be based on, hey, do these deals close? Do these companies come in and buy a ton of Bitcoin? Does that then attract retail? Or that's the question everybody wants to know. My opinion, I could see it go either way. If we do get some type of crazy blow off top, I would expect a similar pattern. But personally, I'd love to see just this continuous climb. It may be a bit more boring, but personally, I prefer it that way. Less people get hurt or damaged and experience a large drawdown and don't come back to Bitcoin. I think it shows its maturity and growth amongst institutional adoption, etc. So that's personally what I'm betting for, but I'm still very open-minded to crazy leverage, some possible scam companies a la FTX style stuff. We haven't seen any of that thus far, and I don't think there's anything over leveraged at this point, but anything can happen.
So, John, we have big institutions, legacy finance industry is involved now in many ways with Bitcoin. So how does their involvement affect the price action? I think there's just ways to keep the price in a certain range. These are professionals selling and managing demand and over time, so that it basically lowers volatility. And we'll look at a couple of charts here too. But how does that work? What are the dynamics for big institutions and companies to affect and control price? Not control price, but keep it from being so volatile as a kind of a retail driven drive up might be.
Yeah, for sure. So there was a great tweet by someone on the MicroStrategy team, and it was so recent before the show started that I didn't even share it in our channel. But it basically just made the point of he called it permanent. I guess you could argue nothing's really permanent, but permanent equity capital flowing into Bitcoin. It's really happening for the first time. In the past, people, retail especially, would buy Bitcoin using their own savings. Okay, maybe they levered up on one of these offshore exchanges or something like that. Maybe they went into a little bit of personal debt to buy Bitcoin, but that's like small potatoes compared to what you can tap in the equity capital markets to buy Bitcoin. And not only is the magnitude different, but just the type of capital that it is different. If you go into personal debt, whether it's like credit card debt or a 1-year bank loan or something like that, it's a 1-year bank loan that if you're wrong on the price, you have to pay back the debt regardless, and you have to take a loss. And if Bitcoin goes down, you get spooked, you're selling your Bitcoin, and then it's like this self-fulfilling thing as the Bitcoin price potentially goes down. Equity capital is just completely different. And even the type of debt capital that these big players are taking out, the equity capital has no maturity, right? There doesn't come a point where they have to sell the Bitcoin and panic sell and pay it back. The debt capital that they're taking on, it's different forms of it. There have been some companies that have taken out term debt. That's like the riskiest. Well, secured debt would be the riskiest, but putting that aside, if you take out term debt, it basically means if this debt matures in 4 years, I have to pay back the principal. And if I don't, I'm screwed and I might have to sell Bitcoin. Convertible debt is similar to that. It has a maturity on it, but it has that convertible feature. Whereas if your stock price goes high enough, it converts into equity. And again, that's more of a permanent capital into Bitcoin. It doesn't mean that Bitcoin is always going to go up. It doesn't mean these stock prices are always going to go up, but we do have the most legitimate, unlikely to reverse bid for Bitcoin now at this point in time. So I do think it's fair to say cycles get muted. That's just one reason cycles get muted, in my opinion. Another reason is just because Bitcoin is so much more well accepted now. We have look back to 2022. Think about what it took to take Bitcoin from 65K to 15K. It took the fastest rate hiking cycle in history. It took the S&P to be down 25%. It took the crypto collapses of Celsius, Voyager, BlockFi, FTX. Oh my gosh, he's the Bernie Madoff of crypto. Anyone who touches crypto is an idiot. There's no ETFs at this point, remember. Then you fast forward, all those things get cleaned up. They're in the past. There was also a ton of miners selling. That was a much bigger factor back then. The miners got way too bullish in 2021, and they had to sell a bunch of Bitcoin. And that's like a self-reinforcing negative feedback loop there. So you just fast forward and things are so different now between the ETFs being there. Those crypto collapses are a thing of the past. I think enough people have realized that the fact that FTX and a group of whatever 20-year-old kids that were running that operation, they've finally figured out that has nothing to do with Bitcoin. It took them a while to get there, but they figured it out. And then you just have also the election last year is like way more support than most people ever thought we would get. I'm not saying it's perfect. There's a lot of crypto grift going on out there, which I hate. But just in general, the administrative support for Bitcoin is leaps and bounds better than where it was a few years ago. So like you put all that together, and I think cycles get muted going forward. But I will give one caveat here. You could see a price decline of over 50%. I'm not claiming that could never happen, but my view is that there would be two things about it that are different than in the past. First of all, I think it would happen after a parabolic run up in price. I guess you could say that has happened in the past. But the main thing that I think is different this time is that it would not be accompanied by a 2022, 2023 type of vibe of a long Bitcoin bear market. I think the price could come down, but just because we went up to 400 or 500K too quickly, and maybe we need to pull back 60% or something like that. So that's my take going forward.
We talked a lot about this last week too, and I agree that there's an element of this cycle is different. Like in 2021, this cycle is different. And I think a lot of that has led to what we've seen as far as this price appreciation. John, you brought up the ETFs, which I think give a lot more stability and credibility to Bitcoin on this cycle than we've seen in past. Brady, you brought up in the bear market of 2018, 2019, like you guys were grasping at any mention of Bitcoin. But the truth is, during this most recent bear market, Fox Business was still talking about Bitcoin. You had it in the conversation. It has become a readily mainstream, acceptable investment vehicle that it wasn't viewed as 5 years ago, or even just 3 years ago in the last cycle bear market. So those factors, I think, play an effect as to what the drawdown looks like. John, you bring up a really good point, and I like playing this game of what causes these drawdowns. So like last time we bring up, it was rate hikes and it was the collapse of these different companies. The companies on this cycle that everyone is talking about are these leveraged Bitcoin equities, the Bitcoin treasury companies, and the Bitcoin treasury plays. Every single one of these won't work. That's the way markets dictate and work. And I think as more and more excitement is driven by the price of Bitcoin going up, more and more companies will start to explore this as some sort of investment thesis that they want to then start to dip their toes in. And I unfortunately think that there will be some companies that will do it in a more dangerous, risky way that will leave them exposed to a smaller drawdown. They could get hit on just a 20% drawdown in the price of Bitcoin. And then that could start that unwinding process and see the drawdown to a 40, 50% to get Bitcoin to have a drastic drawdown in the sense of like traditional investment vehicles, but a muted drawdown in the sense of Bitcoin bear markets and a Bitcoin drawdown.
Let's take a look at the drawdowns. Here's the drawdowns. That was the volatility chart. So here are Bitcoin bull market drawdowns through the current cycle and the past two cycles. And you can see that got a lower drawdowns on this cycle than we did. Last cycle was extremely volatile with huge drawdowns. I think this one right here, that was the COVID drawdown, I believe. And then it was even less actually in the 2017 cycle, which I was surprised to see. But generally, we're seeing lower drawdowns now, and there's just some data to back up what we've been talking about here. And this is showing the Bitcoin 30-day volatility. It's the lowest volatility of any major all-time high in Bitcoin's history. And Joe Consorti says, look at the last decade or so. BTC's current volume is what you generally see before or in the middle of the main run. This is not a cycle top. There's so much more gas in the tank. John, how do you feel about that assertion that we're still early and we have a lot of upside left?
Yeah, I think that's the game everyone's playing right now, is figure out where we are in the cycle, how many innings, if you like the baseball analogy, whatever. I think that is a good chart that Joe shared. And it doesn't surprise me that things would be a little more muted going forward. I still do think there will be a period of euphoria when retail arrives to some extent, or even we always ascribe FOMO to retail, which is true. Like they're usually the group that gets hurt by it the most. But just think back to 2021. Think about all the money that VCs put into crypto. Do you guys remember OpenSea? What a joke. Like people were putting hundreds of millions or maybe even billions into OpenSea. And these are the
Yes,
professional.
it was like a $10 billion market cap or something.
Yeah. So I think you do have to remember that there will be FOMO from players beyond retail as well. Like maybe it'll be some, I don't know, pick your investor cohort. Like maybe some financial advisors will unfortunately get in right at the top of this cycle. And remember, we all got in like at the top of some cycle, or not all of us, but like we've all bought at the top of some cycle in the past. So I'm not trying to deride anybody that happens to, but people are going to come in later. Wasn't Sequoia like an investor in FTX or something? Like these are people who FOMO'd in and made like really dumb decisions. So that will happen this cycle. I think we're just not even close to that point yet. I think that's what these charts are trying to demonstrate. Yeah, different ways you can look at it, but I think the vol being relatively low is a good indicator.
I also just want to, I'll share this story from my own Bitcoin journey of, on the topic of buying tops. I definitely was like turned on to Bitcoin during that 20K run up in 2017. But I always bring up how like I'm so thankful that I actually have no liquid capital that I could be saving money with. So I couldn't buy that top. All I could do is actually sit there and study Bitcoin. And I'm like grateful for it because I know myself, having come from like a growth investor strategic approach, if I had bought this asset that then just dropped 80%, I would have been so turned off and I would never have had the curiosity to dive into it. So to your point, John, like there will be some people who are just trained in traditional finance who will watch the volatility of Bitcoin and not understand that it's a feature, not a bug. It's a part of volatility on the downswing also means there's volatility on the upswing. So that's why like whenever and I'm sure all of you guys, when we talk to clients, it's always, you have to have a 5-year time horizon. Like this cannot be money you want to access in the next 12 months. You really need to be looking at this. I feel dirty saying it like this, but think of it like a 5-year bond. Like your money is tied up. Don't expect to like cash out in 16 months. We'll talk again in 5 years after you've done the buy.
Perfect segue, my friend. Pierre Rochard posted this week that you have to hold Bitcoin longer than 5 years to be guaranteed a CAGR of more than 0%, according to the historical worst case scenario. Longer than 6 years is more than a 20% Bitcoin CAGR. Bitcoin is long-term savings technology. So you got to hold for at least 5 years. You should think more like decades when you're getting into Bitcoin. Just accumulate and hold, enjoy the scoreboard, enjoy the Bitcoin podcast, 40 hours per week, right, guys?
At minimum.
There's a pro tip for holding Bitcoin for long periods of time. It's much easier to not think about it when you take self-custody, put your Bitcoin in cold storage, maybe a multi-sig, put a lot of friction in place. And I never even look at my Bitcoin, right? It's always a surprise to me when I open up my wallet and I'm like, oh, look at my Bitcoin. But it's out of sight, out of mind, secured, stored away. I have full control over it. Where if you compare traditional finance, you're checking your brokerage account, you're looking at the percentage up and down. It's a beautiful thing just to buy your Bitcoin, stash it away, and forget about it. Come back 5-10 years, maybe you're making a large purchase or something to enrich your life, right? So that's pro tip for you. Buy your Bitcoin, take it into self-custody, and just forget about it.